Hey, greetings. Dr. Jeffrey Scott here. This is my weekend market update for Saturday, November 15th, 2025. I am not at home, therefore, I apologize for any audio issues. A lot harder doing this on the road without my equipment. I titled this one Markets Bend but Not Broken or Not Break Yet, as hopes of Fed rate cut dim. Again, my name is Jeffrey Scott, marketmripro at gmail.com. My Google group is called Top Down Trader, and my website's marketmripro.com. Disclaimer, this is for educational purposes only. Anything we talk about should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisor before making trades. And I've got tools for multiple platforms and approach the market the same with each tool. And I'm so excited that a tool that I've used for 20 years, Metastock, is actually incorporating my platform or my tools. So that launch is imminent. If you're looking for the wealth charts video, not sure I'm going to get them out over the next 2 weeks. I'm doing a lot of travel. I don't know why, but I got two weddings back-to-back weeks, and one of them is in India. So it may be a while before I have a chance to get back home and get caught up on everything. In fact, even the nightly videos that I do, unless conditions allow, which means my wife has her own room with a door and doesn't hear me, I am going to just be doing some text-based comments about the market in the Top Down Trader Google group. Speaking of that, go to Google Groups, sign in, go to all groups, find the group you want to join. Mine's called Top Down Trader. Let me know how you want to be contacted, and then you'll be part of the group. It's a great group to join because it's how I let people know I post things. And like I said, I may post things only in the Google group, especially if I'm not doing videos. Um, I'm looking at the markets and trying to understand if it's a time to be long, short, or step aside. I have been mostly stepped aside because of the choppiness that we've had. It hasn't been a good market to short. And then you get rip your face off rallies like we saw on Friday after a down opening. And boy, if you were short, you got caught with your shorts down. This could be a good sign. This is a group of leaders that we built at my recent live meeting. And we watch these because typically they will show you what the market's going to do. And I thought we were going to break down. The 50 is sort of a major line in the sand for me, and we held and had a significant bounce. Should we be concerned by a cluster of Hindenburg's old news to people that watch my nightly videos? But we are in a cluster, and when I see the clusters, I see the big ones, the big pullbacks. And so I am still concerned, and that's another reason why stepping aside and not over trading and avoiding your market and your balances being chopped up will often make sense. Yes, it's hard to sell everything. You can buy them right back. Recession in our near future, yeah, there always is, so I would never say no. But I'm looking for evidence. The fact that both the 10 minus 3 months, the 10 minus 2 year yield curve both cross below the flat line and back above. Every time you do that, you see the gray bars. Those are recession. So this is going back to the early 80s. Yes, we have a recession coming. I don't know when. If I was a betting person, I'd bet early next year. Why? Because I think the Fed is going to be behind the curve and that there's so many countercurrents going. But this massive dump in employment that we're seeing in layoffs worries me. And if we look at the Bank of America yield index option spread, you'll see spiking, but the spike sometimes doesn't occur until you're in a recession. So we don't see a whole lot of credit tightness, but it's off the bottom. We'll have to watch that. And then this one will come up, be updated this week. It's monthly. You don't get recessions unless you're below minus 20, and we'll see where we are this week. Now, what happens if the Fed doesn't cut in December? Perhaps some of the resetting of pricing this past week was in case the Fed doesn't cut. So maybe that's already marked in. What's interesting, if you look a month ago, we were almost at 100%. If you look a week ago, we were still above 60%. If you looked yesterday and on Thursday and on Friday, we're below 50%. So most people think we're not going to get a rate cut this December. You can see it's at 44%. I'm not sure it's all priced in yet. I think even if it is priced in, it will not do a lot of positive things for the sentiment in the market. Know your news and earnings, another big week of Fed speak on the left. We've got the minutes of October coming in, but we've had so many Fed speakers all over the place. No more cuts, two more cuts, one more cuts. I doubt there's a whole big surprise hiding in that. And we'll start to see some data. We'll see some import prices, home builder confidence. We'll see housing starts, but that was for October. Philadelphia Fed, that's up to date. And then how is the September employment report going to help me in November? Jobless claims for November, that might be helpful. Leading indicators, that's a month old. PMIs for November, maybe that helps. So there's a fair amount of economic news as well. But boy, we got this flashing light right up here called NVIDIA. And I think the only things that can take us out of this funk and this market sell-off, especially in the data center space, which led us over the last couple of months, is NVIDIA to have good earnings. If NVIDIA screws the pooch, we're going down hard. If NVIDIA earnings are good and their outlook is good and they say good things on their call, then I think that ends this sell-off and we rise into the end of the year. It's a big day on Wednesday afternoon. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. All right, so we concluded our live meetings for this year. So the 2026, the calendar will come out hopefully next month. I'll have to reach out to my buddies at Orange County and see if they want to hold their meeting, which hopefully they will because we've had it for years. It's in June. That's the low cost meeting. Got to get there, but we stay in a Residence Inn equivalent hotel, so it's cheap. And typically it's $300 for early admission and $400 if you wait until the last couple of weeks. The Palm Beach County meeting, I had such a good time. I will be repeating it again. It'll be in sometime in November, December. Not the cheap meeting, but I don't think anybody complained because, well, the other thing they complained about is they gained weight. It was a great meeting. Appreciate everybody that came live and those online. Let's go on to the charts. If we look at the daily briefing, and this tool here is called Market MRI Pro. This is my I guess I don't want to call it my best product because which is my best kid or best grandkid. It's probably my most complete product, freestanding with data included. And that's what I like to use on these reports because it's got everything in one place. If you start with the daily briefing, we could see the Russell actually finished up 0.29. It was down almost 1.5%. The Qs finished up just a bit, but it was down almost 2%. The spiders down a bit, but were down a lot more. And the diamonds 0.62, the leader to the downside, but they were down 1.24. So you can see over here, not necessarily at the top of the range, but close to it. The dollar was up 14 cents and kind of in the middle of its range. Volatility was down 1.85 and wow, Bitcoin continues to get clobbered. It was down 3.81%, and you could see on the week it was down 9.19. Imagine what your portfolio would be if you trade growth stocks and the market, the Qs were down 9.19. You'd probably be down 15 to 25%. I know I would be if I was fully invested, which I am not. If we look at the new high, new lows, on the left is the NYSE, on the right is the NASDAQ. And you can see they're both pretty negative. Why? Because the number of new highs have dropped at 52 weeks, while the number of new lows have gone up, so the negatives will get deeper. Now, participation kind of sucked on Friday, and that is a negative. Let's take a quick look at market surge volume because I forgot to look already. I like market surge for volume, not because I can say it's the only one that's accurate or frankly that it's the most accurate. It's because it's consistent and I use it all the time. And you could see volume was a little lighter than average, so not a big volume week. We can see 38% of the stocks in the S&P 1500 were up on Friday, 40% in the NASDAQ, and only 39% in the NYSE. Pretty well balanced, but pretty lousy. That would be an argument against Friday's reversal being the end of the pullback. Not saying it's not, but participation was poor. If we look at one-day change in the S&P 500 sectors, you could see energy led 1.69, tech up 0.54. Look, tech was flat on the week. Imagine that with all the volatility. If we look at real estate, 0.29. From the downsides, financials were down 1%, materials almost 1%, and healthcare, which had been leading, especially biotech, was down 0.6. Where was the strength? And this was sort of a flip-flop day in that it was the opposite of Thursday. Solar, biotech, exploration, energy infrastructure, think MLPs, um, software, defense, clean tech, all of these things are up. But if you start to look how far they're up, the only ones that are up massive were the first four. All right, what was the laggards on the week, or at least on the day? Cannabis, but I mean, as I say, it's such cheap stocks. The volatility is huge. I ignore it. China was down 1.47. E-commerce, discretionary, and for change, silver and uranium were down as well. If we go into the timing model, called the timing brief, and we look at the weekly model, here is the optimistic comment. We're not broken. We're still above the WMA. The bongos are still in a buy, except for the Russell, which we know has been the laggard. But if we look at the buy-sell signal on the weekly charts, we remain in a buy across the four major ETFs, being the spiders, the Qs, the Russell, and the diamonds. So if I want to be long, there's my evidence. However, when I look at the daily chart, all four dailies are in sells, so the short-term trending indicator down. And notice we've broken below the WMA kind of decisively on each of the indexes except for the diamonds, which is sort of just below. We are in a sell signal on all four. So if the weekly is in a buy, but the daily is in a sell, it still, to me, is a pullback in an uptrend. So but we'll see if the weekly holds. So pullbacks and uptrend are opportunities for me when they reverse. And the question will be, are we done going down? And we'll show you some of the tools that I use to help make that decision. Notice that the candles, whether they're white or red, are open. That's important because my convention is if you're down on the day, you get a red candle. So you could see the spiders here were down a bit. Um, on the other hand, the fact that it's open, it tells me it opened down here and closed up at near the highs. That's actually a bullish candle, even though it's down a few pennies. If you look at the Qs, the same thing, up a few pennies, but a bullish candle. If you look at the Russell, up on the day and a bullish candle. And you look at a doji, which is an indecision bar, but if I have indecision after selling off a couple days, maybe it's telling me we're going to have a reversal. How about looking at the index charts by themselves? So let's just blow them up and take a look. Here you could see the spiders. So the good news, we closed above the 50. You could see here in the upper left-hand corner that we closed at 671.93 and we're $3, $3.50 over the 50. The 50 is what we call free parking, and often pullbacks to the 50 become great buying opportunities. That is until the 50 doesn't hold and you get things like the April pullback. So if you want to be optimistic, you have decent seasonality here, going higher. You traded below but closed much higher than the 50 on the daily chart. And you could certainly feel like this market has bottomed and you want to participate. So I think that's a legitimate chance. I'll give you the counters as we go forward. If we look at the weekly here, you could see that really was a nothing burger week, changed 0.14% on the week. So I thought that was kind of interesting to look at. That's why I showed that to you. Get back to the daily. We got some screwiness there. Okay. So here is the daily. Let's take a look at take a look at the Qs. On the daily Qs, same story. Traded below the 50, at least opened below the 50, and I got up, I got on a plane, and I thought it was going to be an awful day before the plane landed. The day was pretty darn good. Open candle, up on the day 0.08, but it's really about the turnaround, closing above the 50, and again, free parking. So That's the kind of thing that can turn out to be a nice place for reversal. And like the spiders, we're in okay seasonality, and we're probably in okay seasonality until we get into the middle or late January. Let's take a look at the diamonds. I don't want to be a broken record, but similar story, although this is the weekly, so let's get this to the daily. Come on. Not quite to the 50. You can see the bounce off the 50 here, the bounce off the 50 here, the bounce off the 50 there. So that's why we call it free parking. However, when you fail at the 50, it can become resistance for a while as well. So again, same story, down day, that's different. Closed above the open, this is sort of an indecision bar. And is this setting up a traditional morning star pattern with a gap up on Monday? Would not surprise me. Let's take a look at the Russell. The Russell has pulled down. It broke below the 50 and then failed. That's not very good. Now, it's pulling into an area of support and it bounced. It closed higher than it opened. So the Russell's weaker than the others because it is clearly on the daily charts below the 50. And the 17 is about to cross below the 50, which we don't like either. So we'll see if the Russell can't get healthy quickly. Now, don't forget, all of these are just off all-time highs. And so if you look at the difference between a 252.77, let's call it 253, and a low here of 233, 20 points, 10% off the all-time highs, and it's the weakest of the indexes. If we look at the VIX, we want to see the VIX come down. And what did we see? We're seeing a lot of topping candles, but the VIX hasn't come down. It's still staying in an elevated area. I like to see it get down here, and even better, I like to see it get down there. So that elevated VIX is not a positive. It tells me that risk is still there. And if we look at the dollar, I like a weak dollar for U.S. equities, but there are people like Kudlow and others that think a strong dollar is good, so I understand that. Dollar's come down off the recent rally, although it was up a little bit on Friday. I think it was up, yeah, 1.14%. Here's where it was high. Here's where it was low. It's still close to the lower part of the range. If we look at commodities, and commodities have been interesting. Big sell-off on gold and silver on Friday, but gold had all-time highs. What a nice run here. And this was a run that we called, and it was kind of an obvious run. And, we had an earlier sort of a false breakout there. But I remember one of my videos, I just did this. I said, we just broke out on gold, and gold had a massive run. It pulled back, it started to run again. We'll see if this was a one-day reversal, but down 1.81% on gold. Silver, similar. I hate when I do that. Let's just blow that one up, make it easier on me and you. And you can see silver down, a little bit of a doji, down 3%. So a tough day on precious metals, which had been doing quite well. You could see oil is sort of lingering below the 50 and the 200. Natural gas has pulled back some. If you look at the 10-year, it was up 0.93, and the 30-year was up 0.98. Both are below the 200. I think the Fed rate cut will have influence there as well. Although maybe the bonds will like it better if the Feds don't cut. Bonds being the smart money. So, look, we're at a perfect place to bounce. We're in the strong part of the season. We should bounce, but I'm not convinced. Let's look at the buckets. Buckets are showing more to the left than to the right, so the buckets show the markets are weak. We know that. We don't have excess below. We got 11% on the NYSE, we got 8 on the S&P 1500, 13% in the NASDAQ, and 10% in the Russell 2000. So we do have stocks building up below the Bollinger Bands. But I made a pretty bold call on a video April 7th, said the market bottom was in. I was close to being the right day. And here's what April 7th looked like. See, this here we had 76% of the NYSE below, 79% of the S&P 1500, 52% of the NASDAQ, and 66% of the Russell 2000. So as I said, this is kind of weak today with more stocks to the left than to the right, but we're nowhere close to what bad looks like. So this would argue that not a signal that we're bouncing. Market breadth, this is my big concern. The good news is the NYSE, despite a weak open and then a drop, closed just below the 50. I'd rather be just above. The NASDAQ composite is just above. Talked about whether this was kind of a triple top and whether or not that was going to be a short-term resistance, and then we sold off. Here's the problem. See this guy? That's a Hindenburg Omen. We've got 7, 4, 7, 8, and 1, 9. The last 15 days, we've had 8 Hindenburg Omen signals. That is a cluster. As I showed you in my PowerPoint, I get nervous with clusters. The more we have in a given time, the more we sell off. And so even though the Hindenburg Omen is old wives' tale and it doesn't mean it's going to sell off and only 1 out of 4 are significant, I'm still concerned, and that is why I have between cash and put protected positions, probably 75 or 80% of my portfolio is cash. What is a put protected position? Sometimes when the market is tough like this, I'll buy married puts. What does that mean? It means I'll buy a stock and buy a put at the price that the stock is. Maybe go a couple months out. I'll sell a call that'll cover half the price of the put, and so I've insured the price that I buy it at. I have upside protection because the call's not at the money, so it's at least a strike price out. So I can have some capital appreciation if the market decides to go up. I have protection if it goes down, and I treat that like cash because it's worth what the put strike price is. The challenge is, what do you do when the stock moves up? Do you trail it or do you leave it? And that's a whole different discussion. So I'm worried about those Hindies. I think that is, to me, why I'm still going to be careful, even though we're at a place that looks like we could be bouncing. If we look at stocks above the 200 in red, the 17 and 20 in green, the 50 in white, you can see the number of stocks above the moving averages has dropped. But if I tighten this up and go back and look at April 7th, you will see that we're nowhere close to being low enough on those. So I think this market is not out of risk. I'll leave it at that. But it becomes less risky to the downside the longer we go on because seasonality here usually will kick in. So I'm still worried. If I look at my larger market breadth, and let's just pick on the spider. And I get a lot of questions. When will I know it's a bottom? Well, I'll know it's a bottom when I see the buckets get overdone to the downside. I'll know it's a bottom when those stocks above the moving averages get to areas that we bounce from. And this one is one of my favorite tools because it looks at the 13-week new high, new low. Now you could see it's at 26. Is that meaningful? Well, you can look at prior pullbacks, this one in here, and what was lowest it got to was 17. You can look at this pullback. What did it get to? Just highlight it, got to 0.14. You can look at the April 7th pullback and realize it can get down to 0. So we are at 0.26. We're not far enough to say it's a reversal. This is the AD lines. It's pointing down. I'd love to see the AD line pointing back up as the market's going down. And look at what happened down here. We bottomed and started going up on the AD line. I'm not sure I'd call that a divergence because we started going up at the bottom, but we're still going down the AD line. So I don't see anything here that says reversals imminent. Again, we certainly could bounce off the 50. We certainly could go higher here. I just don't know if I'm convinced that we're out of danger. If you look across, you're going to see the similar pattern, 0.13, 0.14, and 0.16. So we are getting oversold, just not oversold enough. And AD lines are going down across the board. So again, I remain cautious. I remain hopeful. I'd love to see the market bounce. That's why I still have some money in this market. I'm playing some triple Qs. I went out of them on Thursday and back in on Friday. I hate being whipsawed, but sometimes you got to do what you got to do. Um, I've got my LABU position and a lot of cash. And I can't wait to deploy it because I'm not making any return on my money sitting in cash. It hurts my return for the year. But I'd rather be flat in a bad market than chopped up and see my account drop in value. Just curious, put the spider here. So this is my favorite layout. I call the JAS layout. It's standard in the program. Um, and the reason why I like it is I have my favorite indicators on the chart. You can basically build the same chart whether you have my wealth charts package, the Metastock package, the TradeStation package. In fact, the chart will be exactly the same. What's unique about this product is this real-time scanner here that's scanning in the background during the day. Kind of think, radar screen in one of the broker platforms, which is a great tool, but is limited to the number of stocks you could scan, or Market Watch in another Market Scan, Market Watch, and another of the platforms, which is limited the number. Here I'm not limited. I've got 3,736 stocks. So I'm going to do a quick top-down analysis and a little bit bottoms-up, but let me just preface it by saying I am not saying buy, 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 buy like Jim Cramer. I'm saying watch the things we pointed out. Watch, do we hold at the 50? Do you want to throw a little money into the market carefully and get out if we fail? Absolutely, I think that's reasonable, but I'm not in a go all in mode. Just to say that because I sometimes sound like a permabull. Let's look at the top down. So I've taken my 3,736 stocks, and each one of the stocks in my universe will be put into a sector and an industry. So I'm not the S&P 500 sectors. I'm not the S&P 1500 sectors. I'm all the broader market sectors. The only things that won't be in here are stocks less than $1 or less than 100,000 shares. If we look at, first let's look at change and see what the top three were: energy, utilities, and healthcare. So let's highlight those. Now what's going to happen is the list on the right, which are the industries in the market, went from 160, 170 down to just a smaller amount because these are the industry groups in these top three sectors. And the 3,700 and change stocks went from 3,700 down to 1,000 because these are just the stocks in those three sectors. Okay, so these are the industry groups in my selected sectors. These are the stocks. Let's rank these also by percent movement on Friday. I have different ways of ranking if you're short term, medium, or a bit longer term ranking of strength. And you can see what, you can rank to what you like. Sometimes I'll do FM2 if the market's trending. If it's chopping around, I'll usually look at percent. So we stayed at percent today. Here's the ranked percentages by the industry groups. So let's look at them. Refining and marketing, biotech, renewables, exploration, midstream, gas and equipment, independent power, solar. 1, 2, 3, 4, 5, 6, 7, 8. Integrated, energy. We'll stop there. So now I got 601 stocks. Now I have 3 or 4 different ways that I'm going to look at these. One way is, let's look at percent change. Now the problem with percent change is you're going to get things that have massive moves. Okay, I can't buy that after that move. This is a takeout, so gone. Cyberpunk, cheap stock. All right, not a cheap stock. Big breakout here. Gap, volume, breakout momentum. You can see relative strength rocketing versus its moving average. This is relative strength versus the spider, and that shows a lot of strength there. Here's OBV. Kind of getting extended, but not really, so I could still own that. And so then I will come up here. Now remember, this high jump, it's objective. It's not subjective. Subjective, this looks extended. But it's comparing this level of extension to the last year. And you can see when I click on it, it says it's 66%. That means it's only 2/3 as extended as it gets, so it's not extended. If we want to look at the fundamentals, earnings are out, it doesn't make money. It's got minimal revenue, so it's healthcare. Does this mean it's a biotech? We can click on there and it's going to tell me clinical stage biopharmaceutical company, dot, 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 infectious diseases. Okay, excuse me. And let's see here. High options trading. Well, that's interesting. Earnings are out. So let me tell you why I think this one moved. Look at for the discovery and optimization of proprietary antibodies, Scripps Research Institute, vaccine candidates for prevention, diagnosis, or treatment of influenza or beta coronaviruses. The CDTX that got bought out has a therapy to prevent the flu, especially in patients who don't have a good response to the vaccine. And you can see what happened. Now, how do you play that? Here's how I play that. It is so hard to pick individual biotechs if you don't know anything about them. And then you have to worry about earnings dates, and then you have to worry about data release dates and PDUFA dates, and secondaries. Because when a stock moves like IVVD, and we'll go back to it in a second. It's still a very, or actually, we'll go there in a second and look. You can see LABU is in a major uptrend. This is a 3X ETF of biotech. It's one that I've been in. Usually I'm in when I want to be long biotech. And that gets the advantage. Even if CDTX was not in biotech, so many biotech stocks go up when they see one get bought out because a lot of these preclinicals, that's their story. So IVVD is still a really cheap stock, and I think that's the thing I missed here. Price is over here, on, and then the second scale is relative strength. So it's a high relative strength, but it's a cheap stock. It's up in sympathy. Connect Biopharmaca, all right, again, run up, pull back in a breakout, but also a cheap stock. So I might come in here and say, I don't want cheap stocks. Let's filter out less than 5 and less than 500,000 shares. Omar, they have a drug for leukemia. I think it's on the market. Nope, maybe not yet. No revenue or earnings. This is one I mentioned a couple days ago, and I said I owned it, and it had earnings coming in, but I owned it because the CEO is fantastic, and he's got a great record of turning stocks into huge value, and they brought him in, and I know him, and he wouldn't have gone here unless he thought there was something here. So they have cancer drugs, infectious diseases. I'm not advocating it. I didn't buy it for any other reason except for a fundamental, which was the CEO. So I could go down this list and look. ARQT is one that's setting up in a flag and maybe breaking out of that flag here. Um, and it's also a biotech. So I don't want to go crazy on the long side here, folks, because I don't want you thinking that I'm buying, because I'm not. I'm nibbling at best. So that's looking at performance. Well, how about looking at this 2-day momentum? CDTX, what's ABVX? Looks like either a reverse split. I doubt it. That must have been news, and that was on July 23rd. Let's see if we can capture any news that late. I can't go back that late. Nope. Two logical mid-cap biotech buyout partners. Well, okay. We love buyouts. That's how you make money in biotech, typically. Um, Growing optimism about the company's earnings might drive the stock higher. Um, all right, that's a good story. But is it extended? Nope. You could actually buy this nice little uptrend here. Another thing that I like to do is I like to now set it up to look for pullbacks and uptrends. Hit OK, and then rank it by up dots. So the dots here represent volume, excuse me, momentum, breakout volume. I don't have a gap one here. And then the next one up is CPR, which is a one type of a moving average crossover system, and then the other is the EMS. And those are shorter term trading signals that I do when I go in the market intraday and historically traded futures or stocks as a day trader, which I really don't do anymore because too much work for too little money, to be honest with you. So let's rank FM2 and just see. Here's that CDTX again. It's going to be there on everything. SRRK. All right, this is a beautiful chart. SEPN. Now, the downside of this chart, it had a really big move on Friday from below 20 to 23, so a 15% move. So is the move all done? Actually, it was a 20% move. Why do I like it so much? I don't know this company from Adam, but you know, it broke out of that line there. Probably could have drawn one from there as well. But a huge breakout off the 50. Now let's look and see the news. Was there news? Misses revenue. Well, that's not good news. Highlights company progress. Okay. Healthy. Tech. No idea what they make. But it's a drug discovery company. Okay. So the news, nothing new. How about on earnings? Um, doesn't see anything fundamentally that's driving it. Could read here, give me a sense of what it does. It's just another early stage biotech. Again, when one gets bought, the others move. I still like LABU, but it's a nice looking chart. CELC. So this is one that shows the benefit of positive trial, positive presentation at the European Society of Medical Oncology, probably will get an approval for a drug in non-small cell lung cancer. Again, the story of biotechs. Now, what do they do after these big run-ups? They do secondaries. And secondaries will pull the stock back. Now, I'm not saying Celsicity will do it. They would have done it already. Um, but a lot of these smaller biotechs, imagine if your stock's trading at $14, um, how much money you raise by selling a million shares, 14 million, versus if it's at 88. So when your stock pops and you have no products in the market yet and you think you're going to need cash, you raise money by selling shares. Makes sense to me. DNTH, another decent looking chart. Again, I'm not going to go too deep into this because I mean, I don't know these companies and there's a lot of them. But again, why worry? Just I buy LABU. Of course, in fact, I'm saying this again. It's probably jinxing it, but this is how I like to play the biotech. VLO is one of those refining and marketing companies. We saw how strong they are. Big uptrend. So maybe is it extended? No, it's definitely below 100. And if we look here at earnings, we could see earnings came out October 23rd, a growth of 221%. Woohoo! And a revenue surprise as well. Earnings surprise. It trades at a multiple of 17, a PE of 351. Wow. Um, that's pretty damn impressive. Excuse my French. I like it. Thing. This is more exploration and production. Hasn't done much, but it is in a gradual uptrend. Broke out above the 50. Iron. I think this one looks good too. This one had no. Let's see. Was there a story on this one? Disc Medicine announces submission of new drug application for accelerated approval of bitopertin for the patients with erythropoietic okay, porphyria. Um, that tells you that they have positive data because they're going for an early approval. Um, a significant indication. Is this going to be like CELC that you buy it now and hope that they get an approval? Again, I showed you how I like to play these. Just looking down the list, this thing's shown up a few times. Yeah, it's just broke up, but really not going anywhere. Another oil refiner. I think it's a refiner. Is Murphy Oil this exploration? Oil and natural gas exploration production. Okay, so it's MUSA, which is the refiner. Broke out here. You could see I was looking at it a few days ago. Um, so there are some good looking stocks despite it being a not a great looking market. So that's top down. That's the way I prefer. But though I can't help myself is I also like bottoms up. So let's look at my base impulse, all those stocks, and let me show you my trick. I built in two trading systems here that are a combination of my best filters and scans. The first one's called A plus. I'm not expecting a lot today because the market was bad. All right, so we don't have any of those. Remember, less than 0.5% of the stocks were up. Let's look at the A's. So this is requiring a stock to be in an uptrend, so it requires that weekly bongo, which is the one on the bottom, to be blue. It requires a squeeze, which is that yellow line, and either momentum or a breakout. Relative strength versus the spider has to be above the moving average, and OBV has to be above. Uptrend pullback sitting on the 50. BKR, which is an oil services company, Baker Hughes. NAMS looks like New Amsterdam. Okay, and let's look at New Amsterdam. Oral solid dosage production, drug marketed in Europe. I don't know about the US. Let's take a look. Close that. Come on. There we go. And not really any revenue yet. We can look here, tell you what it does. Metabolic diseases. Oh, okay. This is why this company is so exciting. They've got a drug that is really good for LDLs, which is the bad cholesterol and triglycerides. That looks interesting. So kind of a wedge setting up in here. But New Amsterdam looks good and it's not overtly expensive. Um, and it has all those features. It is good volume. It's got momentum and volume in a squeeze. It's got relative strength versus the spider breaking over the moving average, and it's got good OBV. Sire is one that I need to do some research on, but it's broken out here, pulling back, giving you a flag, maybe new opportunity to get in. Again, it's another preclinical or pre-sale of a product, biotech, and then TNGX. Again, another healthcare stock. Healthcare is strong, energy is strong, the rest of the market not so strong. In fact, I forgot to look at the ratio charts, so just look at those real quick and then we'll give her my parting comments. You could see energy is strong. You could see even technology is sold off. Materials is trying. Real estate, defensive trying. Healthcare, defensive doing well. You can see staples is improving while discretionary is falling. So clearly rotation away from communications, technology, and discretionary, which have been leading. And I just put this together, timing model to Bitcoin and then the 11 S&P 500 sectors. And you could see that who's in a buy signal right now? Well, you have energy, you have materials, and you have healthcare. Isn't it interesting? The same three that look good on the ratio charts. All right, so I'm going to stop here. Again, I will be spotty over the next week or two as I will be busy with flying, weddings, etc. And as I love my wife, but she has no tolerance for me doing these videos with her in the same room, and I don't know how big the hotel room is in India. Um, I will put things in the top-down trader group. If there's massive changes, I'll definitely come back with something. I think this market is at a very interesting place. It would not surprise me if we get a couple days bounce here. I think seasonality is our friend. I think the 50-day support is a great thing to see, but I'm still really worried about those Hindenburg. So I'm going to keep a lot of cash and I'll make some small attempts. And if they start working, then I'll make bigger attempts. Have a great week. Don't overtrade choppy markets is my recommendation, and we'll see you when we see you. And thanks for your support. Hit subscribe if you are new to my channel. Remarks, thumbs up will all help me get shown to more people, which would be great for me. Take care, everybody.